Welcome to the Two Tokens podcast. In today's session, we'll be discussing tokenization of invoices. As you know, the Two Tokens Foundation started a series of podcasts. Every 2 weeks, we will post a podcast on these channels on tokenization of everything, really. But today, we'll be honing in on one of the working groups that started last year on tokenizing invoices. And we're doing that in the studio with Dion Bongaerts and Arnoud Buschenke. But let's start with you, Arnoud. Let's do a short introduction and maybe you can tell the listeners who you are.
Thanks, Alex. So I'm Arnoud Buschenke. I'm the Director Innovation for ABN AMRO Asset-Based Finance. I joined Two Tokens in this, I would say adventure in invoicing to tokenize invoices and make it easy for owners of invoices, buyers of invoices, insurers of invoices, to get access to these assets in a far simpler way than we do currently in the old school market. That would open up a whole new set of opportunities for us to move forward. So I'm really happy to be here. Happy to share some knowledge on what we do on the market, and hope to interact with a whole lot of you who are listening.
Good. And sitting here next to me is Dion Bongaerts. So maybe you can tell me and the listeners a little bit about yourself.
Okay, thanks, Alex. I'm Dion Bongaerts. I'm Associate Professor of Finance at Rotterdam School of Management, Erasmus University. I'm also Academic Director of Fintech at the Erasmus Center for Data Analytics, and work for Two Tokens in the research team. And I'm a member of the Invoice Markets use case, and also of the digital euro use case, for which we plan to do a podcast sometime soon as well.
Yeah. So digital, is it a digital euro? Is it a stable coin euro?
That's still to be decided. Maybe both.
Yeah,
actually.
maybe both. Yeah.
That's what I hope personally.
So what we try to do at Two Tokens is to show the industry and show the world that tokenization is here and it's here to stay and it's already being applied. And so the goal for today is to once again show that in the fintech industry or the invoicing industry, really, tokenization is a really good solution to what actually, Dion?
All kind of companies want to finance their activities. For example, buy raw materials. They need money for that. If you need money, you can, for example, get a short-term loan or so. You need working capital, essentially. At the same time, you have invoices that still need to be paid. You could try to accelerate these invoices that are due to you. For example, by selling them to other parties and then get an advance on the amount that's due. Well, this is costly. There's a whole industry around it. It's called the factoring industry, and it's costly. The max that can be charged on this is about 14%. And for these type of things, 10 to 12% of cost is normal. So this is a relatively expensive way of getting capital early. On top of that, there's all kind of operational inefficiencies involved there.
So what you're saying is that the pain in trade finance, is that what it is, and financing your revenue, that is becoming a problem because of bank legislation, and it's more difficult for banks to now finance invoices.
Well, in 2024, indeed, and there's new bank regulation coming into play, Basel IV. And a bit depending on the risk profile of the invoice that you want to get financed, the cost of doing invoice financing will go up by a bit or by quite a bit. So now it's already relatively expensive, and it's expected to become even more expensive in the future, especially if you go through the route that you do invoice financing through a bank.
So I'm old school. I've been an entrepreneur for the last 30 years, and we used to use our bank to finance our invoices and our clients with factoring, and that was basically the only party we could go to, right, back then. But with the advent of Basel IV, you're telling me that there should also be other, parties to go to.
Well, there currently are already other parties to go to. The point is that these other parties to go to, factoring companies, have higher funding costs for doing this than banks. Banks can draw on deposits; they're relatively cheap. We get zero interest on the deposits that we have at banks currently, so that's relatively cheap for banks to do. Factoring companies pay more for getting their capital, so they also charge that onto their clients. Moreover, all the players in this field need to make sure that they have operations organized, that they have a client base, but also that they have a funding base, that they get their money from somewhere. And the requirement to have all of that together is a hurdle for competition in this market.
So this is a great solution for democratizing finance in some way, and by getting funding and decentralized.
Yeah, because what you can do is you can try to unbundle that a bit. That the operational part and the funding part don't need to be arranged by the same party.
And so what kind of investors pick up on those invoices? Are those institutional investors, or how does that work?
Well, currently not so much yet. But the whole idea is that by making this a market in which you can more easily trade invoices, also institutional investors that have a demand for these kind of assets, for example, as a substitute for commercial paper, could invest in these things, make a return on that that's attractive for them, and provide, because there's more demand for it, the funding cost goes down, and that makes it cheaper for the entrepreneur to finance his or her invoices.
So which means that for the bank, this means a different role for the bank, really. Instead of just giving capital and interest, the bank is becoming a marketplace. Is that what you're saying? Or is that a little bit too ahead, too optimistic here?
That is one of the possible scenarios you can get in the future.
Well, luckily we have a bank here in the podcast. Arnoud, I think you are, right?
Yeah, somewhat.
Somewhat.
For 18 years now, so I think I'm part of that.
Are you as optimistic as I, or is that possibly a new role that the bank should play? Or
well, I think I might even be a little bit more optimistic on the role of the bank. ABN AMRO aims to be a personal bank in a digital age, right? So this is what we've been proclaiming for 2 years now, and we are moving in that space. So if we are moving into a digital age, where assets are being a different type of asset than what we used to know, even though it's the same asset on your balance sheet, just because of the behaviors that are possible with the asset in future because of digital technologies, it becomes something different. It becomes something you can actually start applying in your business in a different way. So also our role changes towards those assets. And as Dion says, we are now also a little bit being forced into evaluating all these assets because of Basel IV coming in, and that also gives us opportunities, right? So, and as we were talking about institutional investors, this market is actually growing. Institutional investors are looking more and more into alternative assets, because of the very low return on bonds. Another low risk asset is being searched, and invoices as such are being experimented with to be a substitute for those bonds. So there is a market that is growing. However, those institutional investors, they are much more keen to look at other institutions to provide invoices because it's a very intransparent market. The fintech Dion is talking about, they have, of course, different funding sources for their own models, but they also have different types of risk models. These risk models aren't assessed by the Basel Committee, for instance, or by regulators, but they are made by these fintechs to see whether their business model will work and they can make money and don't make a loss. However, that is usually not enough for an institutional investor to say, okay, this is an asset class I trust. So once we bring some sort of transparency to that, institutional investors, banks, but basically everybody who is somehow held to a certain standard of delivery on the results of the assets they invest in, will be able to move into this market, and therewith accelerating the entire invoicing process for basically everybody who wants it.
So, but Arnoud, if I'm in a company that has, on average, let's say, I'm just a small and medium enterprise company. I have 300,000 in invoices and receivables every week. Mm-hmm. How does that work today? You know, back in the old days, I would just submit it to the bank and they would give me an 80% advance and the bank would not own those invoices. How does that work? Does the bank or the factoring company buy the invoices? And could you maybe, for those of us who are new to this, give us a 1-minute crash course what that looks like in terms of procedure?
Of course. So basically, we have two tastes in this sense. You can get a bank loan, and you can assign all your invoices to the bank with a general assignment contract, and then basically the bank has the right to collect on all your invoices if you go default. So then you simply have a loan that is set for a percentage of your total turnover on a monthly basis, and you can basically use that money before you have it. The other option, of course, is factoring. You were already talking about it, and when you move into factoring, then basically you assign your invoices or you sell your invoice. Can be both ways, and they all go to a factoring company. You get a data connection in which the data that is in your accounts receivable, is being uploaded into the factoring company. The factoring company calculates your availability based on the invoices that are outstanding, everything that has been repaid, and everything that cannot be financed, because of course there are also invoices that we cannot finance, for instance, intercompany invoices, invoices that are already past due. There might be credit invoices that are against debit invoices. So basically both fall out. So we make a calculation on that, and then there's an availability of funds for you that you can draw on. And your debtors, they pay to the factoring company on the account that you have given. And therewith the factoring limit is being repaid every time an invoice is being paid. This is, of course, this is the way factoring has been done for decades now, and it's quite a good process, right? If you do that with a company, it can be very efficient in providing more working capital, making the cash conversion cycle a much easier thing to look at. Even help you through seasonalities of your business or accelerate growth. It's the normal process, but it is not available for everybody. And as you might have seen in the market already, and I can understand that probably some listeners might be interested in that or have been interested before. There are more and more fintechs upcoming that are financing SMEs in this market. And that is because the factoring market in itself has not been a really good market for small companies to get funding in, because the factoring process in itself is quite expensive. There's a lot of operations. Of course, there's the funding, there's risk, there's insurance, and it all needs to be paid. And you need a certain amount of turnover to actually make enough factoring turnover in your factoring contract to actually make it worthwhile. And that's also what Dion was saying about the high costs of factoring for SMEs. That's a lot of that is because of the operational cost and the risk on the companies itself. And if that can somehow be less, then more companies would be able to make use of funding like this.
So in a way, it's like crowdfunding your accounts receivable and just offering them to the crowd. Using decentralized technology, but I wonder if because then all of a sudden you have more access. You have access to a wider group of cash providers, finance providers.
Mm-hmm.
I wonder if that would lower the cost, especially for small and medium enterprise. If you look at the other side of the spectrum, where we use crowdfunding or we use other means of raising capital to grow. That is really something that we're also focusing on. But financing your accounts receivable of this is quite novel.
Yeah, but if you just look at it from the funding perspective, it might not even be cheaper because an investor probably wants a better return for the risk that he is taking than a money market party, because a money market party has models that also allow for a lower portfolio price. But the operational end of this could be so much cheaper if it's digitalized, completely digitalized, than with the operations that are now in place. There might be more difference in the operations than just the funding. Even though the funding could also be cheaper, because if this happens, it moves into a market of abundance
instead
of a market of scarcity.
The capital costs aren't necessarily lower, but the efficiency goes up, and you have more to choose from. Is that?
Yes. Competition will definitely be positive for pricing, of course, especially when it's substitution competition. But it's not necessarily that prices will go down, but there's going to be a market of abundance for the funding.
So Dion, but you were just saying in introduction that banks may have a problem putting these assets on their balance sheets with Basel IV. Who are the new players on the block who are going to be doing this if it's no longer the banks, if the banks have a different role?
Then it will be, for example, institutional investors such as pension funds.
But pension funds aren't going to go out there and buy up those invoices. Then it would
no, that's typically too small for them.
Yeah.
So this is the first step through which later on these invoices, for example, by the same buyer, could be bundled, and then institutional parties could buy them at scale.
And so that's the interesting part, right? We have a coalition here of people who are making this together, who are making this possible. I think in another podcast we should talk to some other members in our working group, just such as CrowdZ, because they have a different process and they bring these parties together. Is that right?
Yeah, they have platform. In the end, it should become almost fully decentralized, so that also their involvement is not so high anymore. But they're working on this platform to create a market where buyers and sellers of invoices can come together
and create a flow.
Yeah.
But who regulates this? If you're a company in the Netherlands and you have invoices that go to North America or whatever, what regulator is looking at these accounts receivables? Is it dependent on where the platform is hosted, or dependent where your Tell me a little bit about that. That's interesting.
I'm not a lawyer, so
you're not a lawyer. So next time we should have a lawyer. In the
next time you should also invite a lawyer. Yeah.
Thank God we have a lot of lawyers in the group, and Claire of CMS.
Yeah, she has looked at this.
She's looked at this. Yeah. And it should be said that the working group is creating the white paper and is actually making some deliverables on this. So stay tuned for that. But and besides CrowdC, there's other initiatives, but CrowdC is part of our working group and are doing this in California, but also in Europe. Right? Yeah. Arnoud, what do you know about CrowdC?
Well, CrowdC is a Techstar startup, and you might know that ABN AMRO and Techstars run this accelerator program in the Netherlands. This is how we also got in contact with them. And they started off as a fintech factoring company, and that fintech factoring company has this, I believe, really cool risk model that they are working on to assess risk on invoices. It's proprietary, but they have a good story on it, so we should definitely have them on sometime. And because they are moving forward in a very different pace than incumbent banks can do, they also moved into the space of tokenization of these assets that they are financing. And because of their forward thinking in this, I think we found a party that is really keen on opening up the market in the way that we are talking about. And this is in a day and age where banks are not really able to touch anything on DLT yet. It's very welcoming to see that there are parties that can do that and are willing to work with us to see how we can create something that's going to work for the future.
So, and what is it? Because maybe that's also a nice bridge to why 2Tokens and the tokenization movement here is looking at the invoice market, but. What is it that CrowdC is tokenizing? Are they tokenizing the invoice? Are they tokenizing the amount that needs to be received? What are they looking at? Maybe this is a question for you, Dion. This is really your space, right?
So they're making a digital token that represents the invoice, really a digital twin. What I understand, that's also the only thing that regulation now allows them to do. And the digital twin can be sold in their marketplace. And then you get either fiat currency or a stable coin back for that, a bit depending on the implementation.
So it's a fungible token, I would imagine.
It's a non-fungible token, a unique token.
So you're saying we're making NFTs here for invoices?
We're making NFTs for invoices. Yes, not collectibles.
Not collectibles. No kitty. Okay.
No crypto kitties. Invoices. For that, it's important that these invoices are stored somewhere. And that we don't want to do on a blockchain because that's expensive to do. So
DLT.
So that happens, for example, on the interplanetary file system.
Oh, okay.
And there you can also manage access rights to make sure that you're compliant with all kind of regulations, and also that clients are comfortable with privacy.
Yeah. And what so the ERC 721 or non-fungible token or whatever token we create is burned after it's been paid for?
It's first shelved because you need to keep invoices by regulation for a certain period, and once that period is over, it can indeed be burned.
Arnoud was laughing.
Those are extensive discussions we had about that.
Yeah, this is probably really the fun part of being in this use case. It's getting into all of these details of this invoice asset, and then basically trying to dissect these into what is going to be the behavior or the data requirement that is starting from this asset feature, and burning it or shelving it that has probably been a discussion for about 2 hours on how to do that. And it even led to us thinking about a potential business model of a graveyard file storage that basically says, just like a graveyard works, I don't even know whether people know this, but when somebody dies and you bury them, then you basically buy a lot in a graveyard for a certain amount of time. That can be 5 years, 10 years, 30 years. There are also eternal graveyard slots. That's really expensive, but also someone has to inherit that. So it all brings all kinds of trouble. But that same type of model could also apply to digital assets. And the invoice in itself has this feature of being required to be kept for 7 to 10 years in most countries around the globe for tax purposes. But after that period, of course, you want to get rid of it, because why would you want to keep it? Because if you would take a normal economic upswing and downturn, well, you have 14 years. So what kind of value does an invoice of more than 10 years have at all in data sense? So there is probably no value at all. But somebody also needs to take care of the destruction of that asset at that point. And then you could say, yeah, that's going to be automatic. But if we are going to take part of the data storage offline, then or off chain, sorry, I'm mistaking here. If we take that off chain, then the chain might be able to trigger that, but then still that storage needs to get a trigger, and someone needs to put storage in place that is going to run for all that time. And last time I checked, if you're running a file system on SSDs, you have to at least change the SSDs every 3 years. So there is a whole business model in a new type of cloud storage that doesn't exist yet, that someone could pick up. Yeah, we were really excited, but yeah.
Well, and the working group is going to do the business value modeling, and we'll get more details on that. What should also interest people is that I think, and Dion, you alluded to that, it's important that we have standards, right?
Yeah, that's really helpful. You saw that, for example, also in the market for credit derivatives, credit default swaps. There were no standards in the early 2000s for that, and that market really didn't budge much. Wasn't much growth. And then ISDA, the International Securities and Derivatives Association, came with standards, and all of a sudden this market started to grow enormously because everybody became more familiar with these derivatives. They kind of knew that there were a limited number of flavors of these derivatives, and that made it also operationally a lot easier to handle those. And if we do that for digitized invoices as well, then also all these market parties that can buy and potentially later resell these things have a much easier life in working with them.
I wonder how the regulators are going to look upon NFTs and selling them on exchanges,
But also having a standard for NFTs makes it a lot easier for a regulator to look at this, because they only need to look at it once, approve that basic structure once, and maybe if there's very special features added by a certain market party, they may have to look again, but then they only need to look at that special feature. They don't need to again examine the whole thing. So that's why standardization is so valuable. Also, if we want to get these institutional investors involved, they don't want to work with a gazillion different systems. They want one system in which they can basically do all their business. They may need to make a small change to their systems.
I think to that point, it's important to note that at 2Tokens, we want to have standards, industry standards. So we work with the ITSA, International Token Standards. So they will classify the token that we're creating here. But it should also be said that 2Tokens is chairman at the Global Trade and Supply Chain Working Group at IWA, which is now part of GBBC. And one of the tokens that we did in an earlier working group was the electronic bill of lading token. So, and here the whole token taxonomy and the whole standards were defined and adopted by IWA. So, it might be an idea to do what we're to move this token in that same work group. Because if we can invite,
that would be fantastic.
Yeah, if we can invite other players in the world participating in this token standard, I think that should be the invitation to anybody who's listening. Join us and create that standard.
Yeah, and that makes it also easier to again build additional business models like the one that Arnoud just mentioned on top of that standard. So even if you get multiple of these markets, such a token graveyard could easily, without having to change the technology for each market, service multiple of these markets, and then you get a real ecosystem, and you have a much better chance of this market really taking off. And with regards to the cost, we did some calculations. You can imagine that there's quite some fixed costs involved in setting this up. So the bigger this market grows, the smaller these fixed costs are relative to what's being traded. So the cheaper everything will become.
Right. So Arnoud, what's your view? What do you think? Are we very early stages? Because adoption is imminent. Resistance is futile. But not everybody seems to be of the same opinion. But what do you think? Is it going to take 10 years? Is it going to be a generation? Or are we upon a massive adoption of this new type of trade finance? Really, that's what it is, right? Yeah.
But I think we are through the hype of blockchain right now. Right?
I don't want to hear that. I don't want to hear that word. Yeah.
No, I know, but we're now moving, and that's why I'm talking about the hype of blockchain, and we're now moving into an era where distributed ledger technology and tokens are going to move into the normal economy, and I think what we are doing now is laying the foundation for a market that a lot of parties are already interested in. There's multiple DLT startups and also chain technologies like on Polygon or Centrifuge. They're all looking into this into this new type of asset that can be tokenized. And the only thing that they lack is this standard to which everybody can adhere so that it becomes a large global market. And the thing is, invoices have been probably one of the best standards internationally that nobody has standardized ever.
I remember Edifact and EDI and all that. We did try, right?
Yeah, we did try, but all those things required very high investments for a party to join in. And right now, because of the democratization and the digitalization of these invoices, because of tokenization, it can become really cheap. So basically, invoices are going to be demonetized. And once that happens, yes, we are going to go into the massive flow of everybody going digital. The shoebox of invoices of the smallest entrepreneur is gonna disappear because they're gonna build that invoice based on the order that you got on your phone, and it's immediately tradable. So nobody has to wait for money anymore. And that is a market. Well, I'm very optimistic about this. When this happens, trade finance, invoice risk, everything will change dramatically. You could even go into spaces where you could say, even though an invoice is not paid yet, once an asset has been approved for payment, you can already use that to fund something else, right? So in the terms of looking at supply chains, those can dramatically be accelerated by having all these assets moving on their own. So yeah, I think it is going to happen. It might take 3 to 5 years for things to crystallize and become of good use, and adoption may even take a little longer. But yes, it's imminent. It is futile to resist this, I think it's a good time also to be able to work on it, because right now is the most exciting time. Right, nobody has built the business model yet. Everybody is looking at it. And once we start moving into building and delivering, we'll see customers starting to use it. And that's when everybody becomes really happy, of course.
Thank you, Arnoud. One final comment from you, Dion. You have the last word.
Yeah. So there's one thing I wanted to add to Arnoud's story, and that is that I think and also hope that in the years to come, also the ecosystem and the public utilities around these tokens evolve. That's also why we're doing this digital euro use case, that we have an on-chain token that allows for much more efficient settlement of payments in this process flow. That we also get regulations and laws that allow at least institutional parties to easily buy these things repackaged and in bulk without being classified as an investment fund with all the regulatory costs associated. So if we get those developments from the technical part, from the societal part, that will also enormously help in improving the efficiency of this and helping it to take off.
Well, and on that note, we're transitioning to economy 4.0, I guess, right? And digitizing everything, and the tokens are, enabling all that. Mm-hmm. But in the end, we need to all start using it, and so it's a societal, transition.
Oh, absolutely, yeah, absolutely.
And so all we can do here at the movement is just to show the advantages and show how it's done.
And educate.
And educate, yeah. On that note, thank you both for being here. Two Tokens will be posting more podcasts. Of course, we will also be doing webinars and post other content that you've come to know from us. Please come back to twotokens.org, and you can find us on Spotify and all the major podcast channels. And hope to see you soon next time. Thank you for listening.
That was it for today's podcast. Thank you for listening in, and please subscribe so you don't miss out on our upcoming episodes. If you want to get in touch with us, you can find our contact details at www.twotokens.org.